Good day, everybody. It's Trent Clarenbach with the Clarenbach Green Report. Today is Tuesday, July the 7th, 2026. This is our Green Report website. We're constantly making changes to it, constantly improving the user interface. And this is what the current iteration looks like. We've added our green categories that are more easily accessible, making some improvements along the way. And as we're talking about oil and diesel fuel today, we're going to take a look at the diesel fuel analysis. Now I'm going to go back here to June 9th. And at that time, I predicted a 23 to 25% drop in the price of diesel fuel. That time it was trading at $98 or $90 a barrel. And we anticipated a pullback down 13 to 23% decline, down to $75, maybe $72, and a potential gap filled down to $68. So that was back on June 9th. What has happened since then? This is the daily chart. So back on June 9th, you can see this is when we did our analysis. Forgive me, it closed at $88 a barrel. And we got a little rally the next day, a little spike up the day after, and after that it's just been a precipitous waterfall down to that low of 68.69 on the nearby contract. So that's what the nearby contract shows it at, 68.69. So that's pretty close to that 68, which I anticipated, certainly lower than the 72 and 75 levels of interest also. Now we're getting a rally. And what I've done, I've drawn this trend line here, and we're getting a rally back up to that. Looks like it wants to retest this purple 200-day moving average. Okay, so that's important. That's likely to act as some sort of activity at that level. Some sort of selling is likely to step in at that level. I don't know if it's going to be enough. It's indicating maybe we can get a pullback up to that $90 level. We'll just see here if that happens. But it's looking promising if you're in the oil industry, not so much if you're a grain farmer. But I don't think we're ready to move down to that $45 level yet, and that's likely for a number of reasons. But number one is this moving average, this 50-day moving average, is too far above the 200 period moving average. We need to get these moving averages to catch up to the price in these movements, and it's either going to catch up to the price through time, meaning the price is going to move up to that moving average, or through space, meaning the price is going to move sideways, the moving average will come down to that. So either through space or time, the moving averages and the price will converge on one another. Let's take a look at the weekly chart. I'm going to show you a few things on here. It gets a little messy, but this key trend line going back to the June 22 high, closing high. And I drew this trend line here. It's what I call a best fit trend line. Maybe you want to do something like this. That's possible, right? So what you do is you anticipate a retest of this trend line. But if I draw my trend line like this, we've had the rally above the trend line. Now we come back. I would argue if this is the trend line we're going to use, then we've retested it already, and then we can anticipate a rally from there. I like using the best fit approach. That probably means something like this. I'm anticipating lower prices in oil over time. I don't anticipate it to go in a straight line. I anticipate maybe we get back up to that, get up to fill this gap up here at 80, 83, 84. Find some resistance from this declining 50-day moving average, maybe even get up to 90. 90 seems logical, but it's certainly a round number that could act as a magnet for the price. I'm not ready to call this a bull market on the longer time frame. We're still below a 200-day moving average, or below a declining 50-day moving average. When you see these situations, it's just an example of the buyers and sellers. They're fighting for control of the trend, and I would say it's rather indecisive who's got control of the trend on the daily chart. The weekly chart, though, we're below a declining 200-week moving average and below a rising 50-week moving average. This chart here suggests to me that the bears have recaptured control of the trend, and obviously they have since about the end or middle of March, right? So that's been the case. The monthly chart, oh boy, this is what happens when you go negative back in 2020. Monthly chart, we're below some other key moving averages. So moving averages are a good indication of the strength of the trend, the direction of the trend. Again, the shorter term moving average is above the longer term, so the downtrend is not as strong as I would need it to be to develop really high convictions of lower oil prices in the short term. Let's take a look at diesel fuel. And had a guy reach out to me and suggest that, or hear that diesel fuel is shortage. I'm hearing some of that stuff in Russia. I don't pay much attention to that stuff. Let's look at the weekly chart. So I had this pink, call it red, price target here. I put that target on here a couple weeks ago. We haven't got down there yet, in my opinion. We found some support from this Fibonacci level, 61.8, from this low to this high. That's what we anticipate. I don't trade oil, but if you were trading oil, you'd put a buy order here and then figure out where you're going to put your stop. You're catching a bit of a falling knife, but not really. These Fibonacci levels are very important. Now we're getting a rally in the diesel fuel. The weekly chart, it tells me it wants to go higher. The monthly chart, we're above our moving averages. You have to be bullish above your moving averages. The daily chart, again, it's confusing here because we're above a rising 200-day moving average, all right? So you have to be bullish, in my opinion. But we're below a declining 50-day moving average, right? So now we're seeing on the daily chart, we're seeing this battle between the longer term uptrend and the shorter term downtrend. Right now we're getting a rally. These things don't move in straight lines. I'm reassessing this lower position right now. So right now we're seeing higher prices in diesel. If you're looking to make diesel purchases in the near future, I think this would be a good opportunity to do. Just once these trends happen, we don't know how much higher they're going to go. It's probably going up another 20 cents here, I'm guessing, on the futures. And maybe even, probably at least 20 cents, I'm guessing. It's probably a good time to buy diesel for your short-term needs. My name is Trent Clarenbach. This has been a long one. It's sunny in Saskatoon. Life's good.